Annuity loans are a very popular form of mortgage because they make it possible to planify a budget for a long period of time. With an annuity loan, you pay every month the same amount of money. A growing part of it is the principal payment, and the rest goes to the interests. The residual debt is declining slowly at the beginning because a bigger part of the payment goes to the interests. At the end, the debt goes faster down because you mainly pay for the principal. If you wait too much before effectively taking the loan, the bank will charge you fees for the service of having the possibility to use the loan. Usually, you may wait for between 2 and 6 months without extra fees. After this period, you will pay something like 0.5% per month, which would be more than 6% on an annual base. Of course, you can negotiate the rate with your bank. A formulation like 2 months without provision rate is common. If you buy an existing flat, you will probably not need to pay any provision rate. These are usually foreseen for people who build a house and have greater uncertainty about the timing. Nowadays, most banks will offer you the possibility to pay once or twice a year an extra amount of money in addition to the standard monthly payment. The advantage is that you are allowed to use it, but you do not have to, so it is more flexible than the regular payment. You may have the possibility to modify a certain number of times the amount of your monthly payment. You can negotiate not only the number of times you're allowed to change the rate, but also the range in which you can fix the new amount. For example, you may change the rate 3 times in total, and each time you may decide the new rate you wish between, let's say, 300 and 700 euro. Usually, the bank will require that the minimum rate covers the interests plus at least 1% of the rest balance. This flexibility makes it possible to adapt, for example, if you have a baby or if you get a raise and you didn't expect it. To protect you against rising interest rates, you may decide to fix the rate for a few years. Many buyers fix the interest rate for 10 or 15 years. Therefore, a typical loan is, for example, 15 years fixed and then variable. At the beginning, you pay more interests and less principal, so the risk you avoid by fixing the interest rate is higher. If you fix the interest rate until the last payment, you avoid completely the risk of rising interests. Usually, the longer the rate is fixed, the more expensive it is. This is why buyers try to reduce the term. If you make extra payments, you can afford to reduce the term, and so you get a lower interest rate. Since the crisis of 2008, banks have clearer standards for mortgages. Many banks will consider that your finance plan is reasonable if you have a reliable job, if you put 20% down plus the closing costs, and if you still have some saving ability after the monthly payment, inclusive 1% principal payment per year. Many buyers in Munich do not push their borrowing capacity to the limit, and they want to go safe with a certain margin of safety compared to what banks require. In Germany, normal mortgages are full recourse. It means that if you cannot pay, the bank can not only foreclose on your home, but they can also take all your other assets if the foreclosure could not bring enough money. And even if you do not have many other assets, they can take a part of your wage directly from your employer until the whole thing is paid off. This may explain why people are less risk-friendly here than in other countries. On the other hand, it reduces the risk for the bank, which makes it possible to have lower interest rates. You can negotiate that the bank is not allowed to sell your mortgage. This costs extra and is in many cases not needed. If you do not do so, the bank will be allowed to sell your mortgage to another investor in order to cash it out. Banks usually don't sell mortgages if you pay all your monthly payments on time. If your mortgage is sold, the big disadvantage for you is that the new lender is not necessarily a bank, and therefore he does not have to respect all the legal requirements that banks have. For example, the time between the delayed payment and the foreclosure can be shortened. In some cases, the bank is allowed to terminate the contract before the term. In theory, the bank can also break the contract if you lose your job or if the value of the collateral goes down too far. In practice, you will avoid these problems if you make all your payments on time. If you decide to terminate the contract while the interest rate is fixed, this causes a loss for the bank and you will have to compensate it financially. In some cases, the calculation of the compensation is regulated by law. This is the case, for example, if you sell your flat, but it is not the case if you cannot pay. You are allowed to change your mind within a period of 14 days after you sign the contract. Do make sure that this is written in the contract. After a period of 10 years, you can also terminate the credit without penalties if you respect some legal conditions like a notification delay. This is often used to refinance with better interest rates when the market interest goes down. You become officially owner on the day the seller receives the money on his account. The banks have special methods to make sure you use the money as agreed. You will probably have to pay first the down payment to your bank and then order the money transfer at once from the bank to the seller. Except if you pay the seller the last day of the month, your first month is not a full month. You will probably pay only the interests and no principal for this first rate. Do not be surprised about it. Have you wondered why you sometimes see two different interest rates for the same condition? This is due to the compounding effect on a monthly base. One figure looks smaller because it considers the approximation of a linear interest on the whole year. The other one is more precise and looks bigger due to the effective monthly compounding of the interests.
Do you want to buy a flat in Munich? I give you knowledge about ownership in the city, a proven, successful preparation for your own flat. Subscribe and visit flatinmunich.de.